The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 4th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend. Let's make sure we have an extraordinary day. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. More importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, we've got you covered. Let your fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Let's Show. Right now, the Dow up 185 points, S&P's up 12, NASDAQ 100 up 59, Russell's flat to slightly higher. Semis are up 9 points. Trannies are back about $50. Gold's back too. Silver is flat. Light sweet crude down 92 cents. Let's go to our first caller in Palm Harbor, and that is Jim. Jim, thanks for calling. Thanks for holding. How are you doing on Magical Monday?
I'm doing pretty good, Steve. I appreciate you very much. I watch your show every day.
Well, thank you for that.
Just like to ask you a question about Micron MU. I bought a small position in it this morning.
Okay. And just how long are you holding it for? What's the plan of attack?
I was looking at a mid to long term.
Mid to long term. Okay, so if we take a look at Micron, here's what we've got to see take place. And I'm going to start off, Jim, by taking a look at the weekly time frame chart. Now, last week, because you are watching us on TigerTV, just as it did the week of March 16th, last week it continued to move higher and do it with less relative energy out there. That's an indication, and because last week was a dark cloud cover candle, said, okay, I'm going to move a bit lower, which it did this morning. So what price did was it tested Stevie's red line. So if you got in this morning, it's a great, let's say, reward risk opportunity, because if you see price close below what I'll call right now 56.78, Stevie's red line, what you should anticipate is a move back to this is a weekly chart I'm looking at, probably to the week of May 4th. And that's in the $45 level. So you want to watch my red line figure of 56.78, really kind of like a hawk. Let's say you don't have Stevie's red line on your system, then what would you do? I'd be paying attention to the gap to the upside that took place on May 22nd. There was 111 million shares inside that move. Price came back a couple days ago with 101 million shares, not what you wanted to see. Then on Friday, toned down to 74. Today you're at about 45. You just don't want to see price close below the 56.47 level out there. So the question is, and what I do know, I know you want to hold this for an intermediate period of time, and maybe that's going to work out, but you've got some substantial resistance inside of Micron in the 62.63, 63.42, and 64.66 level that it has to get through. So that's what I see on the intermediate and the daily charts out there. Does that help at all?
Sure does. I really appreciate it. Yeah, I knew there was some resistance up there, and but my background's electronics, and I kind of understand about memory, and I
Yes.
think I think there's going to be just tremendous needs for memory going forward, and I realize there's going to be some volatility in anything with tech, but I really like the company.
No, look, I get it. And you talk about long term, you said intermediate to long term. So I started with the intermediate term time frame. And long term, this looks pretty good out here. And I'm looking at a monthly time frame chart. But nonetheless, this still needs to get through resistance. Each time it's been up, which is when I say each time, we're talking on a daily chart, just really 3 times. I'm referring to the March 13th high up at the 63.42 level. This is where the bears have jumped on board. So when you've got a gap that took place a few days ago and there was some volume behind the move, so price came down to support. Just don't let it bust through that support, because longer term, you very well, I'm sure, are correct. And I just want to help you try to position it with regard to, when to, from a trading standpoint, when to call quits and then come back in. So just keep your losses small as much as you can. Okay, my friend?
Okay, I really, really appreciate it. And like I said, I watch your show every day. I just think you're great, and appreciate your help.
Well, well, thank you so much for those kind comments. Much appreciated, and always call in. That was Jim in Palm Harbor. The second question that came in was through the Tiger's Den. I see we have a couple of them out here, 3. And the first question was, let me just make sure I read this properly. I mean, you spend time to write, I should spend time to read it. And this is a question about the NASDAQ composite out here, although I think we can interchange between the composite and the NDX. But it says the NASDAQ composite, the 7,600, you'll see it's trading at 75.99 and change, retesting the March 13th high. If over by about 2%, would that suggest that the NDX 100 8,800 measure move target is acting like a magnet out here? So let's try to put that together. And if we take a look at the NASDAQ composite out here, we're at an all-time high potentially from a closing basis. Market hasn't closed today. This is a weekly time frame chart. Let me show you what I mean. And inside the NASDAQ composite, one of the things that you and I know is that this formed a nice island top reversal out here. I'll just go ahead and draw that in so everybody at home can see that. Very bearish pattern that went ahead and led to a correction. Now, you must remember that over the course of the last century, the Dow has on average generated a correction once a year. There are a couple years where we can see more than one correction. And by correction, I'm referring to something greater than 10%. I'm using the normal nomenclature out here, albeit I disagree with it, but still just with regard to the normal nomenclature, a retracement greater than 10%, but not to exceed 19.99%. And that is what took place after this island top. Very bearish pattern. Maybe that could have led to a bear market move. It hasn't. Now price is back up there. There is nothing more bullish than a failed bearish pattern. So we come back from this break. Let's get a feel for where the NASDAQ 100 is going, what pitfalls there may be, because there are some out there, and what to look for. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 182, S&P's up 12, NDX 100 up 0.8%. That is leading the charge to the upside. So let's go right to it. It feeds right into the question about the NASDAQ Composite or the 100. And there was a reference to an 8,800 price projection. And so if you're watching us on TigerTV, watching us live on your stream, on your mobile device, or however it is you're getting this broadcast, could be through the eSignal platform. The yellow rectangle, this is, by the way, this is a monthly chart for the NASDAQ 100, which we know formed a top back in 2000. And we know that as price was getting into that level, first to try getting in there in 2015, it wasn't able to punch through. It tried again in 2016. And finally, with conviction, this thing moved higher in January of 2017. Hence the question about, hey, if the NASDAQ Composite can take out its previous high, which was from March out here, and do it by more than 10%. So that's, I would assume, a little bit of a conviction range behind that move. Does it suggest that we head back to the 8,800 level? You see, there's a measured move. One of the cool things about identifying a consolidation pattern is it provides you and I with a ruler. It allows us to measure where price should go to the upside or downside when the consolidation is broken. It's equal to or greater than, but at least it provides you with a target. And in your case, in my case, this helps us to understand what the markets are doing. And so the question was, hey, if we take out the all-time highs, you know, is the 8,800 level being attracted as a magnet? It would appear as such, but it's really more than just that. This is just you and I taking a look at this chart and thinking in terms of dollars, as we should. Now, if you are listening and you're overseas, you're looking at my information. You're saying, well, it's nice that it's breaking out inside of dollars, but I trade in euros, or I trade in pounds, or I trade in yen, or I trade in Aussie dollars, or you trade in loonies, whatever it might be. And so it's really important for you to buy something that's going to break out of a consolidation or anything else to make sure that it's breaking out in your currency. That's how you put your bread on the table. So as we go take a look at the NASDAQ, the NDX 100, which is at a new all-time high from a closing basis, but the market is far from close. It's 1:20 in the afternoon out here. This takes a look at the NDX 100 on a daily basis, priced in dollars, left-hand panel of our screen, priced in euros next to it, priced in yen. Next to that, that would be the second from the left, and then on the second on the right, in the very right panel is in Great British pounds. Well, what I can share with you is that if you are a trader in those three currencies, that breakout party above its all-time highs, that took place a while ago. Well, I can't say a while ago. Inside the yen, that was on Friday, and we're having follow through to the upside. In pounds, it was a couple weeks ago. In the euros, it was a couple of weeks ago. And so therefore, where the NDX 100 is headed to, or at least should head to, because this is a breakout that's going on, and it is a worldwide breakout for those. You don't really think that you are the only one trading the NDX 100, do you? I mean, you don't believe that. Not for a heartbeat. And those of you that are money managers, you know how false that is, because some of you actually have clients overseas, so you understand what the portfolio mix is and so forth with regard to U.S. weightings, international weightings, and so forth. So very likely, because we're trading inside the swing point, which was a big swing point, it was in dollars from March the 13th. Whether it's with volume or not, it's likely without volume. It is summertime. It's Monday. It's a nice summer in Florida. We just have to remind ourselves that it's June because it's sort of like this stuff year round out here. But for everybody else, it's summertime. And so we should see the market continue to drift towards the 71.86 level inside the NDX 100. Will it bust through there in dollars? Well, let me tell you, it certainly should, because that breakout party is going on inside of the NDX 100 with regard to all of the other currencies. It most certainly was not a market top. That much I can assure you, and that's referring to March 13th. How certain? 10,000% certain that the market has to behave like it hasn't behaved before in order for March to have been a major market top. It simply wasn't. Now, that doesn't mean that things are all rosy, or Rhodesy, I should say, out there, because there are some slight problems inside of the NDX 100. Now, these problems can be dealt with, and it will just take a bit of time. If we take a look at the equal weighted ETF, QQEW, for the NDX 100, that's one way you could trade it. That's the top portion of our screen, versus the Qs, the way that most of you would trade it, or maybe you would use the 2-time or a 3-time ETF out there. You can see that right now we are at a new all-time high on a closing base. We're using a line chart out here. The previous was 174.08. We're at 174.29, but we don't have that same high print inside of the equal weighted ETF. Is that a problem? It could be a problem. As long as the divergence exists, you always have to be looking over your shoulders for some kind of trap door. Now, I'm not referring to a trap door as if it's going to be a significant high. I just shared with you, there is no way, zero, nada, zilch, help me out here with regard to more of those factors, that the high inside the NDX 100 in March was the all-time high. Nor is it on a closing base the all-time high as we're speaking of that's going on today. The NDX 100 is headed higher. To where? To 8,800 or more. Maybe it's 8,900. I don't have the exact number out there because the consolidation could be off just by a tad out here. That doesn't really matter. Now, I cannot share with you when that's going to occur. I wish I could. It's just that it is likely to occur out here. But many of you are thinking more in short term. You're not really interested in an 8,800 projection. However, if you have your money in a 401k account and you have the opportunity to be in the tech sector, well, then you do care with regard to what the long-term objective is. Now, inside the NQ out here, so this is a divergent pattern between the equal weight and just the normal weighted ETF that we just have to pay attention to. If, in fact, we see the equal weight get above its all-time highs out there, then it's really smooth sailing out there. Then the wind is really at your back. We don't have that. So we're still, with regard to like the Dow and the S&P 500, we're still in a consolidation. We're not in, well, we might be inside the index 100 too. Very possible. So it's not, the indices are not clearly out of the woods out here. If we take a look at the NQs on a daily basis, today you can see that prices trading above the March 15th high. That's 7,100 even Steven. That's a dashed green line on my chart. That was a really significant level of resistance. The problem is that as far as projecting where price will go to, it's close above that resistance. It's just really headed back to the March 13th high. Is this potentially top, is what Mike K is asking. Yeah, it's potentially, but not like potentially, like it's a double top and things are just simply going to get crushed or something to the downside. We are still in this consolidation. They are hard as heck to trade. Mike is asking if it's a double top. If you're wondering where the sellers are, they're not that far ahead of us. They are at the highs from March the 13th, 72.1450. So Mike could be right about that. I guarantee you, the sellers are sitting up there. So we're going to find out if the bulls can roll them over, or if they just get, their guts shot up. That would be the bulls. Steve Rhodes will be right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So as we take a look at this 5-hour chart, you can really see the gargantuan consolidation, so to speak, that the NQ itself has been trading in. Now, you'll see several arrows on my screen. This is one of my proprietary tools and indicators, and this is a 5-hour time frame, so you see 300 minutes out here. And if you just simply go back into the January high out here, if you go into that one and then take a look at the February low, the first one that took place, and then the high out here in March, and then the low out here in April, and then another low out here, a higher low, by the way, in the April 20th, 25th time frame. Then we had a little short-term pause at a top out here at about 2 in the afternoon on May the 14th, and a slight decline. This is the type of pattern that would signal some type of impending top, and then we would just be taking a look at support. Is this pattern about to play out? Well, this is a 5-hour time frame chart pattern. As I speak right now, it would be possible. It just depends on how this indicator and how price moves. But the earliest time frame would be, this one's going to finish at 2. Then I would need another 15 hours on top of that in order for that pattern to potentially form out here. I'm not saying it is. I know what to look for, and you know what to look for with regard to the next short-term topping pattern. Now, Mike K, it asks us as a double top on a daily basis. So 5-hour chart, obviously a shorter time frame than a daily. And so, Mike, I'll be watching for this as price gets up to test that high. Very likely it's going to test that high, and then we'll just watch to see how this pattern plays out. So, tune back in tomorrow. It is a great time frame and a great set of tools to help us identify, at least in the past, what has been during this consolidation, which we didn't know initially that that's what it was going to turn out to be, but we certainly do now. And so we know what to be looking for. You know what to be looking for out there. Now, we had another couple of questions that came in. Let me just move on to those. One was from Ruby, and Ruby had gotten into oil, light sweet crude. So if we take a look at lights, is that correct? You said oil. I'm in. Okay, yeah. Just it took me a little bit of time to actually read, trying to do two things at once. And I'm pretty good at doing two things at once. So let's go take a look at light sweet crude, see if we can help Ruby out here and see what it is that we see. Do I like light sweet crude out here? Here's what I don't like. Here's what I dislike. And that was Friday's close. I think we talked about it. I think Garo and I were speaking about this, Garo in California, on Friday, because he was looking at an oil company, and I'd asked him the question, if light sweet crude moves lower, is that going to change your opinion on that equity moving higher? I apologize, forget the equity, and he was not. And I said, okay, good, because what we didn't want to see was light sweet crude close below 66.20. And that's what it did on Friday. And now we're seeing some additional follow through to the downside. Not really what you wanted to see from a weekly basis. It certainly isn't what you want to see on a daily basis because, Ruby, this could be an A to B equals CD to the downside. And that's going to give you a price projection. Here's our A point was at the high on May 22nd. Your B point would be the low of May 29th. Your retracement high just 1 day later on May 30th. And your 1-to-1 level would get you to 61.57. But if this really turns out to be an A to B equals CD to the downside, then the answer is no. It's not going to be a 1-to-1. It's going to be some type of expansion thereof, either 1.272, 1.618. I'd probably be heading towards the 1.618 level because that would get me all the way back to February 9th. That's in the 57.18 area out here. That's what I see. If I pull up my other chart, do I have another chart where I can pull up light sweet crude? What did I do? Oh, I changed over to a different time frame. Let me come back here. Let me just see what else maybe we can look at. Now, there's different time frames, Ruby. For example, the 240-minute time frame, prices below that bullish structured box. That's not good for you. It's just not. You don't want to see price trade below 65.48. You're at 64.90, so that's not a good thing. 30-minute is trying to, and don't be faked out by a little counter trend move up to 65.43. That would just be what the 30-minute profile box would say, could unfold out here. So as I look at light sweet crude, and we pull Stevie's other chart over on our screen, and we go ahead and open that up, we just don't like it. I don't like it. I do not see the type of bullish support that you would want to see to say go ahead and take a long trade. This tells me that light sweet crude on this chart wants to come back to the March 16th low. That's at 61.20 based on the way it's traded. Now, I'll go ahead and put this is the July contract, put the 30-minute time frame in. When we looked at that, that was giving you at least a bit of even this doesn't provide you and I with some type of bottoming signal out here. So best of luck. I hope I am just simply absolutely wrong, But please keep a tight stop on this because this thing could get moving and grooving to the downside out there. And so that's my take on light, sweet crude. We had another request inside the den to go take a look at ticker symbol WB. Sounds like Warner Brothers out there, but I know it's not the WB. Instead, it is Weibo Corp. Now, somebody wanted me to take a look at it, but you didn't give me an indication, I don't think, of what it was that you wanted me to look at. So S&P, help me out here. What is it that I can help you with, please? As we take a look at this equity, we look at it on a daily time frame. Let me pull over the other chart because if there's some type of bottom out there, this would be the one that would best signal it. And other than a Tom DeMark 9 count that took place on May 22nd, and that was trading in the candle of both candles 5 and 6 out here, which said that the movement to the downside was losing its energy. It's done that. It's traded sideways. It's traded in between the low of that session, May 22nd, and the high of the session from May 24th. So I don't see much here to the upside or to the downside. I just see some kind of consolidation on a daily basis. Does not necessarily mean that it is a bottom that has formed inside of this equity out here. WB. If we put the switch to the weekly time frame chart, because this will provide me with a lot of information, this suggests that to me that this has lower price to go. This looks like it's running for that November 3rd, 2017 level of potential support. And that's at 89.30. You can see how on a weekly basis, Stevie's red line here has acted as resistance. Here is where price was moving higher, doing less relative energy. The bears showed up right here on March 2nd. Price closed below Stevie's red line. Yeah, there was a little bit of a counter trend rally, but we have been below Stevie's red line ever since that. And so this suggests to me, S&P, that there's lower prices coming at you. Let's take a look at the monthly time frame, see if there's any signals out here. In the monthly time frame, doesn't look good because it's got that topping pattern that is out there. And so I think in the case of S&P, at this stage of the game, yeah, just moving sideways in a bit of a consolidation. We identified those levels out here, but this is headed lower. The question is, will 92.67, the bottom of its weekly bullish structured box, hold as support? And I don't know the answer to that. So hopefully that helps you. We've got the Dow up 170, the S&P up 10. The Russell is slightly red, so we should take a look at that. I can give you the parameters there in case a short-term top is forming. Yeah. Folks, longer term, the NASDAQ 100, it's on its way to 8,800. It hasn't topped at all. But in the shorter term, we're going to have some bobbing and weaving. We'll come back and do a little weaving when we get back from this break.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. This segment is sponsored by Singer, because we're going to do a little bobbing and weaving out here as we go take a look at the Russell 2000. And as we take a look at the Russell 2000, we're looking at the cash indice out here, trading right around the 1647.50 level. What we can notice is price has been trading higher, doing less relative energy out here, very similar to the way that it was acting back on January 24th. So you see that pattern if you look at the left-hand panel of my screen out here. And it actually generated a signal, just a signal, on January 24th that said, hey, watch out. That was a bearish reversal candle. We did get a similar bearish reversal candle out here on May 31st. But price ran down to and closed where? Stevie's red line. How important is it? We'll just classify it as top secret, super important out here. You'll see the same thing occurred back on January 24th. Price held the support. Therefore, that was an early signal and said, no. Price support's holding. We're not ready to move lower, not until January 29th. And there, not only was it another bearish reversal candle, but it was a close below Stevie's red line. So what's the level that would signal to us that the Russell 2000 is a bit tired, wants to just take a nap and rest a bit out here? It's Stevie's red line, 1641.80 to be exact. Now that number may change over the course of the next several hours. If we see a close below that, that's going to tell you, that's going to tell me the Russell 2000 is ready to take a bit of a nap. If that happens, then we can go take a look at our market profiles as one level inside the equity futures contracts to identify where price could pull back to. At this stage of the game, it's still long and strong. You can move higher, do it less relative energy. It just kind of hands off the ball to somebody else. And you can see that price came down, tested, and rejected the support level out here. That's what it's done so far today. Just the mere fact that it's not zooming higher like the Index 100 doesn't mean diddly. It just simply doesn't. Prices came down earlier, went ahead and tested support. Now, if we take a look at the 4-hour time frame, 240-minute dead center out here, that profile, let me go ahead and expand the box out here, has me a tad concerned. Is this an early warning message out here? I turned price off. But I want you to notice, I'm going to go ahead and expand this out even more. See how the top of this box formed below the prior top? Center line is closer to the top. It's hard to read out what the bottom is because it's the exact same bottom level out here. Bearish structured box out here. Says 1653 is going to be tough to get through. We were just talking inside the daily time frame for the Russell itself. I didn't do the TF. I can give you that. So let me do that. Let's be copacetic here. 1643.60 is the number. It actually has to be a close below the open of Friday to be to really be a signal. But 1643.60 would be a level to be watching. And if price, because sellers should be in control of this area here, they should be able to get price down to the 1642 level. But intraday versus daily, I was looking at a daily time frame out there, are two different things. Now, normally in this up move, which we have, you would see this new profile form above the prior one. So maybe it's just a timeout and some sideways movement out here, and Stevie's overreading it. That is a possibility, but there's certainly resistance at the 1653.06 level. And at 1654.90 on the 2-hour chart, it too has a bearish structured box, and that too is resistance. And at 1654 and change, we've also got resistance on a brand new 60-minute profile. So don't expect the Russell 2000 to be the one that is going to take off to the upside. And don't misread that as if the market is now getting ready to turn. It well indeed may be doing that, but not until we see Stevie's confirmed signal out here, just as it did back in January, will we go ahead and buy into that thesis. This has just been a pullback to a level of support, and that is what's going on inside the Russell 2000. So as a 147 in the afternoon, we know, cautiously speaking, well, we know where these sellers are hanging out. That is at the highs of the NASDAQ 100, the NASDAQ composite. Sellers should be, if they are lurking, that's where they are, and they should be ready to open fire on you buyers out there, or the bears versus the bulls. All right. What else should we go? Oh, Monster. Somebody wants to take a look at Monster Energy out here. That would be Tarpon 2. So let's go take a look at Monster Beverage Corp. And the question was for short-term long trade out here. And I see it. Here's what you've got to deal with. This is a daily time frame chart out here. It's too bad it wasn't a third gap to the downside and an exhaustive gap, but at least we have to go take a look at that gap out here. And that's the one from the session out here of the trading day daily time frame chart of the low of May the 8th, 53.04. That is where you may find resistance, Tarpon. I don't know whether or not price is going to be able to get through that area. Now, the gap to the downside was with volume of 9.6 million shares. Nice wide-ranging bar, 8 million shares a few days back on May 30th, but otherwise you've just simply moved sideways. It does suggest to me, it being Monster, that it is trying to form a bottom out there. Why? Because price was moving lower, doing less relative energy. May 17th, the bulls showed up. The following session was really the signal to go long, Tarpon. That was on May 18th. That was a move above Stevie's red line out here. You can see things have gotten a bit tired. It's dealing with those sellers just trying to maybe a sneak attack. Hey, are they really still there? And I don't know the answer. We haven't tested that. But this is the fight between the bulls and the bears. The bulls believe that there's a bottom. You got a signal, as I say, back on May 18th out here. It looks like to me on that trading day of May 30th, you have wide price spread, accelerated volume off of the bottom. That is most certainly what you like to see. So you know you have buyers out here. If you're going to enter the trade, just do proper position sizing. I'd make my stop below the trading day of May the 17th. I know it's kind of a wide stop because it's $1.35 with regard to this average true range for 10 days, and 51.67 versus 47. That's like about a $4. But to be safe, that's what I would do. I would just have a smaller position size inside this equity. The reason you do it that way is because of knowing about this overhead resistance at 53.04. So that would be one way to play it. Let's go take a look at the weekly time frame for you as well. See if there's any other messages here, and there's not. So it's going to be all about the daily time frame chart for you. That could be right. Let me update this. There we hold on a second here. Hold your horses. There we go. That looks a little bit better. So now as we take a look at the weekly chart, that's a bummer. That's a bummer. Hey, 54.10, my friend, maybe all you get out of it. That's the top of Stevie's red line. Oh, that's not the top. It is Stevie's red line. 54.10. Monster Energy trying to make a move off of the bottom. Rhodes with TFNN. Great.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So I had to switch over to my cell phone to finish out these last couple of minutes. My entire computer system has frozen. I'm not even sure where we're at in the time frame for the clock, so I'll just listen for the music. But I know that we've got about a couple of minutes out here. So in essence, what you'll be watching for overnight, because the NQs should be able to get up and test the high. For those of you that, pay attention to the ETFs out there, like the Qs and so forth, and the diamonds and the SPYs, the work, if there's going to be this double top-ish pattern that Mike, in the den had asked about, you're going to see it occur inside the NQs, very likely before the cash market opens tomorrow. That doesn't mean the price can't go and test that today, but let's assume that it doesn't. Then it doesn't really have to go up and test that. The work would be done inside the equity futures contract. I would tell you what that price is, but when I say my system is frozen, I haven't seen it like this. This is like a Disney production. Nothing can move, so it's going to require a hard boot
which I hate to do. You know, it's like unplugging your computer and you've got all these programs running, and I've got a bunch that are running. Anyways, I tried to work on that. As far as gold, gold was kind of flat out here. Just not much movement inside of Goldilocks. Nobody around the world seems to have any kind of interest in gold, whether that's in euros, in pounds, in yen, and even traders of gold in U.S. dollars are getting a little lethargic here. So look, it's summertime. Volume is light. I mean light. It was like around 11, 12 million shares inside the NASDAQ, inside the QQQs as they're pushing higher. It's summertime. Yes, price can move higher on light volume. It's why we like to use all of these different tools to help us identify when things are moving and in which direction and whether it's confirming some type. I think you know what to look for inside the NASDAQ. I'll be back with you tomorrow at 1 o'clock. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.